Both on the monetary policy front and also the economic policy front. What structures need to be built on the markets aspect of China? In the sense that there's no bond market in China, there's no equities market. About 70% of that is still state-owned. What's keeping it from the government reducing its stake in the markets, in a sense?
Yeah, 70% stakeholding has been changed since 2004. We got the major reforms of that kind of system. So that's not a major issue.
Okay.
But how to redistribute the earnings of all the state assets.
Right.
Recently, the government had the new regulation that all the IPO revenues, 10% of the IPO revenues of the listed company should transfer to the Social Security funds.
Right.
So that's a good move, to change this. But as you said, for the Chinese financial market, there's a lot of issues to be addressed to make the income distribution more, toward the household. We got the security market, but the bond market is very limited.
Right.
And also the private equity funds, private equity investment have been very limited, and it's not really available for the private household. And a lot of private equity funds now working in China is foreign. Domestic private equity is very scarce, very small in terms of number. And if that develops, the Chinese people can have more participation in the market, and they can get more revenue, the earnings from those kind of activities. So that's something we will definitely need to develop. So that on the one side, it's a social security issue, but on the other side, for the household, on the other side is the financial system.
Right. Foreigners looking at the Chinese markets will say that the government control of the markets and manipulation of the markets is still very strong, and there's this temptation to think that the government does not want to let go of that control.
That's another issue. One of the things is prudence.
Right.
I think in general, we need to think about this.
Okay.
Banking sector, financial sector, the liberalization to the global market.
Right.
You need that kind of the cautious, because you have a lot of the problems in the domestic institutions.
Right.
Regulatory framework is not really. So that's I have to address.
Okay.
A lot of the regulations, policies is because of the caution. And secondly, I agree with you that there's a very close relationship between the regulatory body and the state-owned, state-controlled financial institutions. But think about, the history of China. 10 years ago, say 15 years ago, Chinese banks were actually the second pocket of the government.
Right.
It's not really the banks,
Right.
right? So after this 15 years, you see the banks are really on the market. They may still work closely with the government, but they become a real financial institution. So from that point of view, I would say there is a process of development and changes. So don't expect overnight changes. It's changing. Things are changing.
Right.
And at the beginning, government may be too cautious. They want to control everything, but then experience will tell them it's better to go. For the market, better you stay away from the daily competition. So things are also changing.
I think because the banking system is still very central to the Chinese economy, the institutional reform, the reform of the business itself has been tremendous. In fact, it's outstanding, even by world-class standards. And banks outside of China are looking at China and saying, you now have the strongest banks in the world.
That's right.
But in terms of policy making, in terms of responses to crisis, it seems that the government still depends on the banking system way too strongly. And if you look at some of the recent initiatives, in order to loosen monetary policy, all that PBoC needs to do is to loosen bank lending or give them a greater leeway to lend in that sense. At the same time, the bank lending itself has been increasing at a breakneck speed, 30% just in the month of June, for example. Where is this heading to in terms of, and what kind of subsequent problems it's going to create as a result of banks being used to stimulate the economy?
Remember, China is only a $3,000 per capita income, low-income country,
right.
Developing country, and China only come to this opening policy for 30 years, and China's financial market only have the development history of 15 years or less.
Right.
So don't expect that this market will behave the same as other mature economies.
OECD countries.
Yeah, all these OECD countries. And last, maybe we should think, we should think that the some ways of Chinese, some methodologies Chinese authorities use, maybe it's useful for others, to be thinking of the financial reforms, financial system of the global architecture.
Well, it's just the way in which some of these reforms take place, and sometimes the PBoC, for example, releases an announcement to liberalize or to loosen monetary policy a day before two IPOs go to market, and that kind of thing. And so people looking at it from outside would say they are tactical in their responses rather than strategic. They're not loosening monetary policy for an 18-month time frame. They're loosening it so that to stimulate the market for today. How would you describe the relationship between PBoC and the other regulators, and how do these decisions get made?
I don't have much knowledge. I'm not in the government,
okay.
So I have not much more knowledge. But what I really like to remind you is that PBoC and the Banking Regulatory Committee and the Security Market Regulatory Committee, they are the cabinet member.
Okay.
They are not like in other countries. They are administrative, and their decision making is a part of the decision making of State Council,
okay.
rather than an independent decision making body.
Okay.
It's definitely different from Fed and some other.
So the great level of coordination.
Great level of coordinations are on the higher level.
Okay.
So that kind of coordination, that kind of communications occurred daily among themselves,
okay.
But not necessarily to coordinate with the market movement or whatever, but it's coordinated.
So it's unlike an OECD environment where the monetary policies run independent of the banking policies and
there is a mandate, different mandate for each body, and different target for different body, definitely. And they, for example, PBoC definitely is the major body who take care of the inflation, and other bodies may not take that very seriously, but this is particularly for the inflation. And a different body have different division of labor, so there's a kind of you may say independent, and particularly in the technical level, when they make their decisions and the changes of the regulations, they have their own independent decision-making power. But I would say the coordinations are maybe more as a part of their daily life,
right,
than some similar comparable bodies in the other countries.